everyone, it is Evan here from the Trade Risk on Tuesday, June 19th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we got lots to cover. Markets are picking up a little bit in their volatility. So let's jump right into it here with the S&P 500 cash market weekly time frame. Each bar represents 1 week worth of trading. We can see here on the week, it is only Tuesday, but we are down just under 1%, minus 0.71% on the week for the S&P 500. And if we zoom in just a little bit here, we take a look at the action from this week. You can see we are well off of the lows, but we are still trading below last week's lows. So here's kind of what's gone on is, if you recall from last week, let's kind of zoom out a little bit more. If we recall from last week, we did get a little bit of an intra-week pullback here, but we did find ourselves stabilizing into the close. Buyers ended up kind of pushing us back up, and we closed exactly where we opened. Now, this week, we started off with a gap lower, and we've been under pressure here, particularly in the mornings with these overnight gaps to the downside, but we are still seeing some signs of stabilization here, or buyers are still reluctant to kind of give this market up. We got as low as 27.43, and that's an important area. This 27.40, if you recall, is where we broke out from in the first week of June. So remember, we had about 4 weeks worth of resistance right at 27.40. We finally broke above it in coming into June, and then we went sideways last week, and now we're starting to pull back and basically retest this old breakout level. So from an intermediate term basis, from this weekly chart here, there is really still no technical significant damage or real note to speak of. We are still trading above a rising 8 and 20 period exponential moving average here on the weekly chart, and we are still holding above this prior breakout level. So for now, we do currently have a pullback underway here, but as long as we can maintain above 27.40, I'd say the bulls are still in good shape here on this longer term time frame. Now, if we go down to a daily chart, and let's say we switch to this other board here, we can see now that on a daily time frame of the S&P 500, we have been pulling back for certainly the past 3 days, and then really prior to those 3 days, we just went really tight in here for about 4 days. So we had this tight 4-day overlapping trading session here that was through catalysts like the FOMC, and we had a handful of different catalysts last week, and then this week we started to pull back, or really started last Friday, where we had this first volatile intraday session where we started to break that 4-day range to the downside, but then by the close, everything was good again, and the bulls kind of saved us intraday. Well, the same kind of thing happened on Monday. We started with a gap down, we saw some intraday volatility to the downside, but then we closed strong. And the same thing today, we had more sort of rhetoric, trade war rhetoric heating up overnight. Futures, I believe, were down 1.5% or so or more at the lows overnight last session, and here we are again on the regular trading hours with a gap lower, intraday volatility, and then a strong close. So if you kind of think of the old adage there in bull markets, we'll start with the bull market case it's not necessarily where the markets open, or if they open weak, it's the strong close that you like to see, that you prefer to see in strong markets, in bull markets, in those strong uptrends. And that's exactly what we're seeing. We're seeing the market open up weak, but we are seeing them stabilize and then get these nice strong closes. That is sort of a win or a checkbox in the bull column. When you're in a bear market, when you're in very volatile conditions, what you often see are markets open near their highs and then close weak. They sell off and get beat up into the close. That's bearish market characteristics when you get closes in the bottom quadrant of the ranges, and we're not seeing that right now. It doesn't mean it can't materialize to something a little more nasty, but for now, when we kind of look at the structure here, we're getting this pullback, and we are still holding above some of these key important sideways horizontal levels, and we're trying to stabilize above some of these moving averages here. So for me, I think the bulls really want to defend this 27.40. As long as we're holding above there, then I got to give the benefit benefit of the doubt here to the bulls. And again, it doesn't mean that it doesn't have to be a strong momentum and easy bull market here. It could just be, kind of a grinding sideways mixed market, mixed signals, which is sort of what we've been seeing. But until we start to get a little more structural damage here, it's tough to get too bearish. Now, if you wanted to draw some trend lines on this recent action, kind of this channel that we've been pulling back from, you really got to go to an intraday time frame to get this a little more refined. But I think you see kind of the general guide here. If we can start lifting, say, back above 2780 or 2780, or depending on how tight you want to make it, above this trend line break, that's, I think, where potentially we get more continuation to the upside, or we can start to retest these prior highs. Otherwise, let's see and wait until we can start to hold above a prior day's close or highs of the day. Geez, sorry there, lots of jargon there. So that's the S&P 500, 2740 on the downside. We tapered off right around 2790, but all the way up to 2800 or so. That would be the upside resistance level to pay attention to. Now, the S&P 500 has been pulling back a little more meaningful here. So has the Dow, and particularly the Dow has been the weakest here. Take a look at the volume coming in. It's been down, 6 days in a row now. It's coming back into this important area. This had been drawn on my chart from weeks ago, this 246 area, and you can see we kind of retested it and a little bit of hammer off of it today. Still down 1.14%. So taking the brunt of the selling is clearly the Dow Jones here, but this is going to be a key spot for this market to hold. We're down 6 days in a row, a little bit of mean reversion, retesting this kind of key level wouldn't be all that surprising, but if we do have a more sort of nasty surprise for us, then a complete gap below here would be certainly something that would be bearish in its characteristic. Now, that's the Dow. It continues to underperform. That's nothing new. And the Russell 2000, it's almost scary how much divergence there is right now between the Russell and, you can almost say the rest of the market, but particularly when you look at the Russell versus, say, the Dow Jones, it's amazing to think that they're both major indices of the same U.S. stock market, but there continues to be concentration here in small caps. This isn't new. This trend has been in place for some time now on this outperformance, but it really seems like it's getting concentrated. And in my mind, if you are in the camp where you want to see a bigger stock market pullback, if you are a bear here, it really seems to me that the Russell 2000 is going to have to break down. This is the market you're going to want to see. The Dow Jones has been breaking down. The SPY has been pulling back. They're really just acting as anchors and not letting the, say market kind of the Russell 2000 and the Qs to the lesser extent continue higher. But they're not causing the market. They're not the catalyst for this market at this point, at least at this point, to bring us lower. It really seems like the IWM is going to be what needs to fail, reverse, break some support, whatever you want to see, but break this trend line, start holding below the past couple of days lows, lose some moving averages. I think that's what is really going to take this market to potentially see a more meaningful pullback. Until and if that happens, it seems like we're going to really kind of continue in the same state that we have been in, kind of grinding along, pockets of momentum, and individual stocks still finding some outperformance there. So the Russell 2000, I mean, still a beauty here. It is extended on this intermediate term. It could use a pullback. I think it would still be healthy, but so far it seems reluctant in wanting to do that. It closed almost at new all-time highs today, is basically right where it closed yesterday, or I guess it did because it was up on the day, so it did close at new all-time highs today. So that's the Russell 2000, still best in class. That is what is working there for the bulls, and the Q is really not that far behind, but at least this is exhibiting some normal market behavior here, getting a little bit of a pullback, which is nice to see. Again, take a look at the bodies here. We're opening up on the lows and closing strongly. That is encouraging. These are all down days, but or the last 3 days have been down days, but we have gotten that nice green close. So you can draw this trend line here, see if we get some upside follow through tomorrow to break this trend line. Maybe the pullback is over and we can continue higher. Otherwise, you could pay attention to this 173.50 level. And when we look at a weekly chart here again, we broke out above 170. Some people are going to use this high up here right around 175, which was the ultimate high from March. But as long as we're holding above this general area here, the 8-period EMA there, I think intermediate term, the bulls still do remain in control. So that is the market environment overall. All boils down to kind of more of the same: outperformance by the Russell, lagging action by the Dow Jones, and bulls still more or less in control when we go down our checklist of factors that we really care about. So that is the major market. Let's get into some of the other majors here. We'll go to TLT, which on the week now is also up 0.5%. You can see it is challenging last week's highs, and you can see getting back, working itself up to the upper end of this range. You got maybe a more clear sort of higher low in place now at 119. So it does seem like bulls are trying to firm this up, trying to rally us higher in treasury bonds. So good action there. Overall, longer term structurally here, still in kind of this bigger sideways channel. We'll go to oil next. So oil here on the week is up. It did get beat up a little bit today, giving back some of those gains, but it did start off the week with this nice gap up. Yesterday finished up almost 2%, $13. This was the lows here from early June. We're still holding above it, so it's a little bit on a ledge here, but holding in exactly where it needs to. And as long as we can hold above 13, the bulls can maybe carve out some more support around here. The daily moving averages, though, these fast moving averages are bearishly aligned and above price. So that doesn't give us too much confidence in dip buys here. But, again, if the bulls can defend this and rally us higher and start to reverse these averages, then that would be a good kind of first step that maybe this pullback can sustain itself here. So that is oil. Natural gas on the week, 3.55% to the downside. It ended last week on a nice, constructive, positive note. It broke out and resolved this range to the upside, finished the week right at highs, slightly higher volume coming in, and then it just kind of completely reversed course this week. It took out all of the progress from Friday yesterday on Monday, so acting as really kind of this false breakout here that really rejected these higher prices, couldn't sustain above it, and now today we saw more follow through to the downside, kind of coming back to the bottom end of this range. So we're at best here moving sideways again, at worst threatening a potential with this false breakout leads to a move to the downside, yet to be seen. We'll still give natural gas the benefit of the doubt and see how it acts and resolves from this range. Finally, let's go to gold here, which continues to get beat up this week, 0.5% to the downside. It's below last week's lows, and it's looking quite vulnerable here. It carved out a pretty tight kind of sideways range over about a month of trading throughout the second week, all the way up to about the second week of May to the second week of June in here, really tight. And then it resolved lower last Friday, and it seems to be continuing that slide for now. So lower lows here in gold over the short term. We're going to need some type of reversal, some type of catalyst to get this trend change in place. For now, looks like sellers are in control, and it's a do not touch for me. Silver, pretty much the same thing. I mean, it clearly hasn't, it's just back to its old behavior of the sideways channel. Tried to get a breakout here last week. We played this ourselves, tried to buy it up here, got stopped out shortly thereafter, and this has gone nowhere but moved sideways. It's now back to the bottom end of this range. Big volume came in the other day. Let's see if this support right around 14.25 can hold for another time. I don't even know what number that would be. Probably 10 at this point, but buyers do seem to like silver around 15.30, and they don't really like it around 15.90 in the ETF anyway. And until that pattern changes, or until we get that definitive breakout, that's what we should expect. So that is gold, that is silver, and I think that's everything. So hopefully hopefully you guys enjoyed this video. Thanks so much, as always, for watching. If you do like the video, subscribe to us on YouTube. Keeps you up to date with all of the latest videos that we publish. And actually, I should have mentioned this at the top of the video. Friday, I may not actually get my usual video out. I get a very busy day, and I'm going to be, I think, torn away from the screens immediately after the market close on Friday. So perhaps later in the week, or I may just take the weekend off. So there might not be a weekend recap video, but I will do my best to see if I can squeeze one in. So that is all I have. Thanks so much, and talk to you next time.